the topic of the financing, and we're talking about small business guarantee scheme and the refinancing opportunity. And you'll see here we've got Gary Pretty on the line with us. Gary is Gary, there you go. I should say too, we've had a couple of tests this morning, having a few internet issues around some areas. So hopefully Gary and Michael will be good to hang with us for the whole time. What we really want to do though is talk about the small business guarantee scheme and the refinancing opportunity. Gary is a joint venture partner with Sage, as it runs a Smartline franchise finance, so a broking operation. And we'll talk through this a little bit later on, but one of the reasons why we've actually been working with Gary over the last period of time, which is now beginning towards a couple of years, is because we think this is a great opportunity for clients to have additional services provided through our business. And hopefully it's helping them grow their wealth, because at the end of the day, our purpose is to create lasting financial security with a balanced lifestyle through education. So I want to welcome Gary into it, and also Michael is here again as always. And let's jump into these topics. And as you go along, again, if you've got questions, pop them in the chat box. If we can answer them through the session, we will. If it requires chat afterwards, happy to do that also. So we've got Linda sitting in the background here, also operating, watching the chat box and watching things happen. So let's jump into it. And for a start, what I want to do is just talk through small business guarantee scheme, and I might bring you in here, Michael, if that's okay. We have some rules around there. Maybe you just want to walk us through where the rules are and what we need to be aware of if we're talking about this process.
Certainly, thanks, Tim. Look, this is part of the federal government initiative between obviously themselves, the Reserve Bank, and the and APRA, who's the governing body over the banks, and they want to do this to support the flow of credit into the Australian economy. So it was set up with that in mind, and the idea is that it's to enhance the bank's willingness and their ability to provide credit. Whether that works is yet to be seen, and Gary can probably shed some light on that a little bit later on. But the idea around it is that to get that willingness and the banks to lend, the government has said that they will guarantee 50% these loans, and these loans are unsecured. So the idea is that you're not having to put up security. Again, devil's in the detail. We'll see about that when it actually starts coming through. And the purpose of these loans is for the SME, small and medium enterprises, to use that money for working capital, keep the business going so that the business and all its assets are there on the other side. It's available for businesses with a turnover up to $50 million. So that pretty well says most of the clients that we deal with are going to fall into that category. And the maximum loan you can get per borrower, and again, there's some technicalities there, but per borrower is $250,000. The loan period, up to 3 years, with an initial 6-month repayment holiday. And maybe Gary down the track can allude to, what happens after 3 years. But the idea is this is a 3-year loan with a 6-month, up to 6-month holiday should you need it. That's probably essentially what they've put out at the moment. Again, as things unfold, the details will become a little bit clearer.
So thanks, Michael, because that gives us some background about what we're seeing about the structure and what we can expect and the like. There's a second level to this, and this is where I might bring you and Gary, following our chats recently, is about the practical side of things, because Gary's on the front line dealing with these issues every day, and we had some theory, and what Michael's bringing to us is exactly what the government has told us to look for. But Gary, if you could just talk us through what's going on in the real world behind the scenes, some of the stuff that we're not seeing in the public.
Yeah, thanks, Tim. Important to understand that the banks are very much scrambling to understand what they need to do. As recently as last night, I was talking to someone in one of the major banks, and they still haven't got their policy in place for how they're going to treat these applications. So my simple question is, well, what information do you want from people? How's the process going to work? And the answer is, well, we're not really sure, and we probably won't know until later on this week. So details, even at a banking level, are very, very sketchy in terms of how the process is going to work. What we do know is that there's a 6-month I guess, call it a repayment holiday, but what will happen is interest will actually capitalise during that 6-month period. So you may borrow, 100,000 now, but in 6 months your debt will be higher than that. And you will have to pay the loan off in full over the next 2.5 years. There is no arrangements in place at this stage to roll the debt beyond that 2.5 year period. So all the banks who are involved will be looking at complete payback within that total 3-year period. Apart from that, in terms of information that needs to be provided at the moment, I can tell you there is some interest rates being quoted around with some of the lenders. They're quoting 5.5% as an interest rate during the initial 6-month period, and then dropping back to 4.5% once it converts to principal and interest repayments, so for the remaining 2.5 years. Apart from that, though, quite scratchy in terms of information. I think the critical piece is that existing lender relationships and dealing with your own bank's probably going to be the key during this time. It seems to be that the banks may favour clients who are currently banking with them in terms of the amount of information they may need. But again, we really don't know because the banks just can't come out and tell us exactly how it's going to work at this stage. Hopefully later on during the course of this week, we might have a bit more detail around it, but at the moment, there's not a lot.
Yeah, cool. So thanks, Gary. So you mentioned there, though, about those existing banker relationships, and it's important to bring forward is it is really a time to work with your existing bank if you're going to go down this particular path, isn't it? Because it is unsecured lending that they're backing the person more than anything else.
Very much so. I think the relationship that you've got with your current bank is probably more critical in terms of the business relationship than it probably has been in the past. Lenders are saying they'll look at new clients under this policy, but I think the level of information and the scrutiny they'll place on those will be significantly higher than someone approaching their own bank directly seeking financial assistance. To some extent, I think that ability to approach the bank that you're currently dealing with is probably going to be a critical piece in the whole puzzle in trying to put any funding lines together for it.
Yeah, absolutely. We're going to talk a little later about where a broker is appropriate, but there are times where it's not appropriate to use a broker, and this is one of those occasions, isn't it, really?
Yeah, I think so, yeah. I think whilst we're happy to get involved as needed, I think it just comes back to liaising with your bank and dealing directly with your bank on these types of transactions. That, from what we're getting, seems to be the critical piece in all of it that we're talking about, is that how you're engaging with your existing bank and what that relationship actually looks like. And that's going to hopefully ease the burden of information that may need to be provided somewhere down the track to actually access the funds.
Yeah, and that time frame is critical too. You touched on there, the 3 years. There is a short-term overdraft facility, isn't it? It's the 3 years. That's set in stone at this stage, isn't it?
Very much so. There doesn't appear to be any leeway around that full payback in 3 years. There's no conversations at all being had about rolling debt over at the end of the 3 years or anything like that. It's a full payback at the 3-year term. So again, that's going to impact on just how much credit you do want to access if you need it.
Cool. And so I'd like to swing back to you, Michael and Gary, to talk me through this about how we just touched on there about it's not a free hit, it's a calculated risk. Maybe Michael might start with you, your thoughts on where you sit on this line of thinking.
Yeah, look, certainly, and we've had a session on this before, Tim, where we felt that you're still going to have to pay the loan back, and where possible, if you can get this facility. I have a question just before I go through the. Gary, you mentioned that it's like an overdraft facility. Are the banks okay with maybe providing a facility up to 250,000, but only charging interest? Say you only need to draw on 100. Are they over that? Do you think?
Sorry, I dropped out there for a minute. What did you say? Sorry, Michael, I missed that.
Yeah, the banks. We can get a loan of up to 250,000. So we can get a facility of up to 250,000. Are the banks okay with say we only need to draw on that for 50 or 100,000? Are they okay to just charge us interest on that 50 or 100, not on the whole facility?
I think it'd be just like a standard loan arrangement where you'd only be getting charged interest on whatever you're drawing. I'd very hard push for the lenders to want to charge interest on facilities that aren't being used. What we don't know is what sort of fees will also accompany it. I mean, we've got some high-level interest rates, but we don't know what sort of monthly fees or establishment fees are going to be applicable to these sorts of transactions. And those fees would more likely be based around what sort of limit was being provided as opposed to the drawdown.
Yeah, so it also just leads back to, yes, you're right, Tim. It's not a free hit. You've got to take this on as a business decision. Having a cash flow forecast to make sure you can, at the end of 3 years, have the ability to repay this. Because, yes, there's no security, but you know what? Banks are banks, and they're going to want their pound of flesh. So, and yeah, Gary's already alluded to what interest rate. You've got to factor that into your cash flow. Yeah, so I agree. It's going to be interesting to see how they approach it. But it's not, a free hit, as you say, Tim.
Yeah. If I can just add in there, guys, a friend of mine works at Commonwealth Bank, and I was chatting to him yesterday about these deals, and he said they had a significant number of inquiries from clients looking to take out these facilities, but when they were actually explained the detail around it in terms of it's a 3-year payback and 6 months capitalised interest, suddenly those inquiries dropped off significantly from people looking to take up. So, once I think, as you mentioned before, Tim, devil in the detail, that there is going to be some more information still to come, which is going to impact clients wanting to actually access these funds or not.
Yeah,
absolutely.
Yep. Gary, sorry, Tim. Sorry, buddy, mate. One more question before we move on there. You say there, Gary, that in the initial information that we were given, that the government is providing an exemption from responsible lending obligations, in quote. Now, really, are the banks really going to deviate from responsible lending obligations?
I find it very hard to believe that they will. They may come up with an abridged application process, which may help them circumvent that to some extent, but they're not going to shy away from their responsible lending obligations.
Yep. Yeah. And that's why, Tim, I think it's not a free hit, as you say. They're still going. You're going to have to jump through hoops.
Absolutely. And Ben's posted up a question here too. Do you think they'll charge extra fees for an early payout?
Who knows?
Yeah. You got any insight on that, Gary, at all, about whether there'll be any extra fees on early payout?
Hasn't been mentioned, I've got to be honest with you. Details are very light on around fee structures and that type of thing. We're giving high-level interest rates, but we're not giving any details of fee structures. Don't think the bank will be doing it for free.
Yep. Okay. No, thank you. Thanks to Ben for the question. Appreciate that as we're going along. Banks will put covenants on loans. But point on the bottom there, Michael, around documentation that the bank's going to looking for. They are going to be wanting a new level of documentation for a traditional secure lending, aren't they?
Absolutely, Tim. They're going to want to see, not only just do you, in the past it's been, do you have security and do you have the ability to repay, in a nutshell. Now they're going to want to look at, well, okay, are you going to be around in 3 years plus? Because I know the government might guarantee 50%, but we've still got 50% exposed. So they're going to want to see business plans. They're going to see cash flow forecasts to see, what you're doing and what you're going to do with the loan, what you're going to put into working capital. Great, but they want to see the ability to repay. And our session last week, business continuity plans. They want a different world now. And going from what I just said to Gary, the responsible lending criteria, I think the banks will have their own version of what they feel that means, as opposed to what the government thinks it means.
Yeah, and not to be overly gratuitous, Michael, but you, in this current environment, you're capable of delivering all those through at the bottom, aren't you?
Oh yeah, love it. Yeah, absolutely. It's not only do I love doing it, but it's we should have it.
Yeah,
history shows that we should have had one of these, 2 weeks ago, 3 weeks ago.
Yep,
all those things.
Cool. Thanks very much, guys. So, what about refinancing? And by the way, if anyone's got any questions, please post them up. Thanks, Ben, for putting those questions up there, and especially thanks to Steve Williams for his comment about my background. I appreciate that. But more than anything else, we're talking about refinancing, and we talked before about where brokers have a role to play and they don't have a role to play. Maybe, Gary, we just sort of tell us about what's going on out there, and maybe I'll get a bit of information from yourself as to with the place of refinancing in the current environment.
Yeah, thanks, Tim. Obviously, the number of clients purchasing properties have declined significantly, so the banks still need to write business, and they'll be looking to write business via refinancing of clients. So there's still some terrific deals out there in the marketplace for clients who are looking to refinance, particularly clients who haven't reviewed their interest rates for some period of time. The banks are aggressively looking for new business. We've seen the RBA rate cuts, both the initial rate cut, which dropped variable rates by 0.25, but since then we've also seen lenders come out and drop their fixed rates by 0.6, 0.7, as low as 0.14 in that sort of vicinity. So there's some really attractive options available at the moment, particularly for clients who haven't reviewed their rates for a long time. There's some banks out there who have come out openly and said there's certain people employed in certain industries that they won't deal with. So dealing with a broker such as myself means that we've got access to a full range of banks. Now we've got 34 on our panel. We know what banks are going to look at, what industries, how they're going to look at transactions, and what their appetite is for certain opportunities. But banks still need to write business. They've still got money they need to push out the door. And the way they're going to do that and keep their business rolling on is to look at refinance opportunities, so that there is certainly still opportunities around.
Absolutely. And they are busy doing the day-to-day matters for their clients, aren't they? Because they're also dealing with queries about how people are handling their banking existing clients, aren't they? That's one of their primary focus at the moment.
Most definitely. I mean, they're reallocating staff left, right and centre at the moment to deal with the loan deferment opportunities that people are asking for. So we are seeing a slowdown in turnaround times from lenders to decision applications, but they are very conscious that they need to keep the business flowing, and they need to keep writing deals, and those will come from refinance opportunities, I think, for the foreseeable future.
Absolutely. I might bring you in here, Michael, about the broker option itself and why, I suppose as a business, why we've sort of aligned with Gary to play a role for providing some services for clients.
Yeah, where do I start? There's a lot of different reasons, but I'll keep it brief, Tim. Certainly using a broker, it comes down to time. Certainly most people don't have the time to go and research all the options. And you might, I take the point there, Gary, talked with your existing lender, but your existing lender will know about their product and their products only. So it may or may not be the right one or the best one. So by having a broker, as you say, you've got access to 34. So you have an idea. You get a feel for what's going on out there as to which banks are doing things differently. Also, Jimmy, anyone who's been listening to us before talks. We know about the 10 hats, and where we, if we can't do it properly ourselves, we'll outsource or bring someone in or create a joint venture to assist. We're just availing ourselves of the experts out there, and I'll say it again. People like Gary have got the time to research what is available out there.
Absolutely. And just an example of that research now, Gary, I'm going to throw it to you because I have no idea to answer this question, which was from Ben. He's come with us and said, what are some examples of those questionable industries that you mentioned before? This is an example of why we use brokers, because you'll know that answer far better than Michael or I could even guess towards, but maybe a bank in particular who's not dealing with a particular sector. Ben's question is about the events sector, and is he in a questionable industry because he operates events?
Yeah, so simple answer is yes. So anything tourism, events, hospitality, there's certain lenders who have already come out and said they won't deal with those industries at the moment. However, there are still lenders around who are willing to do it. It's like mitigating risk. It's like you talked about a business continuity plan before. It's how we mitigate risk to the bank for what that may happen during the downturn. So has the client got some savings they can put towards their expenses during the period of downturn? Is there redraw available on their existing loans that they can access as
Gary, drop that to you, Michael?
I can hear you. I think Gary's frozen.
Gary's frozen. Okay, we might just hop in there. I've just got Gary's pretty picture on the screen.
Yep.
What we might jump into though is, so to continue that answer, Ben, I think part of the answer here is it's not a yes or no question, but in terms of would someone financially. Cool. So I think we missed part of that Gary answer. So hopefully we captured it okay. But what we want to maybe say something there is, Ben, is in terms of your situation, we would suggest that rather than say yes or no, you get a loan, let's look at how you can get the loan, what different provisions you might need to put in place. So that's where working with someone like Gary has worked really well for a couple of clients over the last 12 months in particular, who had challenging situations for various reasons, and they've been able to manage their way through that. So I'd say that.
And to add to that, Tim, I think certainly if you're in one of those categories that banks might not be looking favourably, if you go to them with a strategic plan, a continuity plan, and cash flows, it's not to say they might not look at you. Certainly, if you don't have that, then it's easier for them to say no. But have a go.
Absolutely.
Certainly in that commercial space, yeah. In the residential space, in the home loan space, they do look at things slightly differently, and they probably don't look at the cash flows and the business plans as much. It's probably a simpler explanation as to how we overcome those disruptions of income. So certainly, yeah, by all means, the cash flows and all that are critical when you're talking about the business finance side of things.
Cool. Excellent. So, and we just made a note there down the bottom of our screens too, that there's a commercial reality for brokers sometimes, which is there's aligned. They want to best outcome for their client because that's how they earn income. That might be brutal, but it's a fact. So let's not shy away from that's a reality of real life, isn't it, Gary?
Yeah, most definitely. And it's all fully disclosed. Importantly, in all the documentation we provide, any commissions we earn are fully disclosed. So there's no hiding behind the fact we're doing a job and we're being paid to do a job. At the same time, we're providing a great outcome for our clients, and we know that the clients that we've worked with together, that we've been able to save them thousands of dollars on their interest rates over the course that for the clients we've been able to help out. So there's a win-win for everyone if we do it properly.
Yeah, I can verify that. A couple of examples this year, some of those numbers have been really significant. I think Maddie in particular was a great outcome.
Yeah.
So just to wrap up today, and thank you very much to Gary for joining us today. Thank you, Michael, again for your insights. Michael's taken on another voluntary role, I said this morning, from an email. So he's committing himself to going beyond just helping us with the business side of things, but helping the community, which will probably come out the coming weeks. But if you want to contact us, jump on board. We made a note in there on that screen. You'll see a YouTube channel. We've actually got a YouTube channel. So if you just go to YouTube and search Sage Business Group, if you subscribe, you'll get a notification each time, and you'll notify we're loading up all these sessions as we go along. Our Facebook page is there. Gary's also got his Facebook page, which you can join for further information. You can jump in around information about lending in particular and Smartline and what they're doing. I touched on it before too. We are, like we're suggesting to our clients, be brave in this situation and look for opportunities to pivot, adjust, and grow your business. So if you've got friends, family, business associates who are struggling a little bit, I've had a conversation with a couple of people in the last week who have really thanked us for these sessions and said, one in particular said to me, I'm on site and the blokes have got no idea, and thank you for this. By all means, we're open for business. We are genuinely trying to create an outcome which is great for the community, but also sustains our business. We've got a team of 19 and we're looking to keep growing into that team. We're not looking to shy away from this. So if there's people out there who you think you should contact us, by all means, share our details with them. Encourage them to give us a buzz. We're happy to do a free chat for a start and see where that takes us for a relationship. Michael, you're on board with that, aren't you? I think.
Absolutely.
Yep, absolutely. So, and Gary's on board with that, looking for business. We're here to help grow, and that's what we're after. So I want to thank you again. Thank you for being part of this. We'll be back on Thursday with another topic. Looking forward to it, and have a great day. And again, any questions, just sing out and ask. We're here to help. Thank you very much.
Thanks, everyone.